looking at this. Why do we have to buy an insurance once we have our home? Okay, we already purchased our home. The bank says, yeah, it's you can move in at this time. Why is it important to buy insurance? Well, what is insurance for?
Damages, water, fire.
Protection. Okay, yeah, protection through water damage. Okay, you've mentioned some stuff already that can cause issues like fire damage, fire, right? Somebody breaks your window, yeah, things like that. So things like that happen, and if something is to happen to your home is your investment, right? Your home is your investment. And if a fire happens in your home, you want your house to be protected in a way that the insurance will cover to get it repaired, okay? To build it up again. Because things like that, a house can burn down all the way to the ground. A few years ago, I don't know if you know this, or if you've heard of this, but in Alberta, there was a forest fire. And forest fire happens quite a bit, right? Especially if it's a dry season and things like that. And because there was a forest fire, the forest fire spread all the way down to the town and then burned a whole bunch of houses. So we have the insurance to replace the stuff that could be replaced, right? So this is the house, but of course, not everything could be replaced. For example, if you have a whole bunch of pictures, of your kids, and that's burned down to the ground, we don't have that anymore. That's irreplaceable unless you can access that back from social media or something like that. That's a possibility. Now, if somebody loses their lives because of the fire, well, that one is irreplaceable. The insurance is there to help you get back and replace things that are replaceable. So our goal today is to understand the type of policy, type of insurance, and the amount of property insurance affects the cost of the property insurance, and how the amount of property. We'll talk about that. Calculate the annual premium. Okay, annual premium for a tenant's insurance. We'll talk about this one in a little bit of detail later. Calculate the annual premium from homeowner, because there's a difference between tenant and homeowner. Okay, we'll talk about that. Understand the difference between different deductibles, and then determine the amount paid for an approved claim. So that's a pretty big goal for today, and we'll see how far we get on that one. Okay, so property insurance. Property insurance protects the owner of the property from financial loss in the event of damage to or a complete loss of their house and or belongings. So banks will not release the money for a mortgage until the proof of property insurance is given. So we go to the bank gives us a loan, which is we've discussed at the beginning. But before you even move into the house, they would actually ask the person, the owner, get an insurance right off the bat, right? They won't give you the key to the house until you have the insurance. So in short, the bank wants to be sure that the property is insured while the owner of the house still owed money from the bank. If it burns down, the bank will want the house rebuilt. That's a key thing. And you probably want your house to be rebuilt too, right? So it should be noted that tenants, okay, so what are the tenants? Tenants are renters. Okay, so tenants or renters might also want to insure their belongings. So tenants are renters, might wish to insure their belongings with the property insurance. Now, because the tenants they don't own the house, if the house burned down, they're not responsible for the physical structure of the house. However, if I'm renting and the house burns and all of my stuff burned down, okay, let's say my computer and all that stuff, I want all of that replaced. I want my sofa back, right? Well, not the exact same one, but at least replaced. So if we're tenants, we're renting the house or apartment, okay, it doesn't have to be a house, it could be an apartment, we are trying to insure the property, the belongings in the property. The main difference is that the tenant's only insuring the contents of the building, while the homeowner must cover the building and the contents. The homeowner owns a house, so they have to insure the physical house and the stuff inside. So charts showing annual rates for different types of insurance also provided in page 19 and 20, and we'll talk about that in a second. So, what are the factors that help determine the amount of insurance and the correct type of insurance? Okay, so here's one factor. Location. The closer you are to the fire hydrant or fire station, the less you pay in insurance. Now, stop right there. Does that make sense to us? If we live closer to the fire hydrant,
well, then there's
yeah, sure.
No, I was just thinking, like, if you live closer to any hydrants and fire stations, it's closer for them to get there quicker to take care of it, like, possibly see.
Less likelihood of damage.
Yeah.
Okay, so like the three of you are kind of like, you know, combining your powers, and here it's like she got you started and you got started and you got started, right? So yeah, there's a fire, and then my house is closer to fire hydrant. If I call 911, the fire truck will come in, and then it's closer, right?
Less time.
Yeah, less time to waste, and that could save can save a lot of things, right? And there's less damage. And if there's less damage, that means the insurance will only pay less amount, right? So that's it. Yeah, that makes sense. Now, some people live in a small town, where the fire hydrant is not close by. It's going to be a fire hall somewhere. So that one might be a little bit challenging, right? Because by the time the person calls, they travel, it takes time. More damage can happen by the time they get there. Yeah. So that makes sense. Coverage. So that's one thing, location. Coverage can be standard or comprehensive. So comprehensive insurance, what's the difference between standard or comprehensive? So comprehensive insurance provides coverage against more hazards, therefore higher premium, right? So you could probably claim more, right? So they're gonna ask you, do you want a standard, or do you want more like comprehensive, where you have more things that you can claim? Deductible. Okay, now this is another factor. Deductible is the insurance deductible is the amount that you have to pay before the insurance company will pay your claim. So in real life, there are many deduction levels. So these are the following deductibles: $1,000, $500, and $200 deductible. Now let's see if this one makes sense. the lower the deductible, the insurance increase. Now, because sometimes that didn't make sense to me before. Like, why, if I choose 200, my insurance go up? Why is that? So I'll show you why that is. So, if, let's say my kitchen went on fire for some reason, okay? My kitchen went on fire for whatever reason, and then the damage was $2,000. Okay, now let's see what it says. The deductible is how much I pay, the homeowners pay. So if my deductible, okay, if deductible is $1,000, okay, if the deductible is $1,000, how much I pay, and this is owner pays, how much does the insurance pay? I paid $1,000, the damage is $2,000, so that means the insurance only pays 50%, half of that amount, right? So insurance pays $1,000. So I pay $1,000, insurance paid $1,000. Okay. Now, here's the other option. $2,000 damage in my kitchen, and I only pay, my deductible is $500. I pay, I'm thinking, pay deductible. I pay deductible, okay? So how much does the insurance pay? $1,500, $1,500. Okay, let's do one more. $2,000 damage, and then I make a claim for that. Okay, claim. And then I pay the deductible, and this time it's $200 deductible. How much does the insurance pay? $1,800, right? Insurance. So this is what the insurance pay. Insurance. Now, turn it around. So if the insurance pay $1,000, so that means the insurance will have to pay more money here. If they have to pay more money, then your insurance premium will go up. Right? So if the more money the insurance companies, the more money that you're paying every month on your insurance, or every year on your insurance. So that's how deductible is. So the lower the deductible, the higher the premium. Is everybody okay with that? We're gonna revisit that later on when we do the car finance as well. Okay, next one. So we talked about location, where you are in, where your house is or property, closer or far. Coverage, is it standard or comprehensive? Deductible, the more you pay, the less your insurance is. Discounts is the last one. So discounts, many policies include different types of discounts. So some of these are the following. So the person will get a discount on their insurance if they have a fire alarm, right? The fire alarm. Burglar alarm. Carbon monoxide, CO2 detector. This actually makes sense for us, right? Because you want to make sure, if you're inside a house, you want to make sure that you have a fire alarm, right? So make sure you ask when you're buying insurance. Okay, note, this has changed. So note PST, which is 7%, is applied to all property insurance premium. So we have to pay tax, 7% tax on this. So this page alone, we haven't really done any calculation yet. It's just mostly talking and making sure we understand this. Okay. Now when you see calculating insurance, you have two tables to refer to. This one here, table 2, which is tenant insurance. Tenant insurance policy. So this is for renters only. For renters only. Now, here we go. I want to make sure that we know how to read this piece. So, what are the things that they have to take a look at? So, the tenant's policy, this is for $500 deductible. $500 deductible. And it says here, all areas in Manitoba. So, this one is not affected whether you live close to the fire hydrant or not. Okay, so you don't have to worry about that piece. This is the coverage amount. Okay. Coverage amount, the stuff that you have. What's usually inside the apartment that
Furniture.
you own? Your what?
Your furniture.
Your furniture, your sofa. What else? Maybe you got a TV, electronics, computer, right? Stuff that you have, right? This is your coverage amount. So how much are you insuring? What is the value of all your stuff, basically? That's what it is. Like if I add up all of my stuff, would it add up to 25? Would it add up to 30, 50, and so on? Okay, so what do we have in here? Now we got a choice on coverage amount. And then, what are the two choices? The type of insurance. We can choose standard or comprehensive. So that is a factor. Which one costs more? Standard or comprehensive? Comprehensive. So over here, if you just want the standard, it's 158. And then this is 200. Okay. If you look down in here, this is a nice thing because they already have it here. All of these values, all of these amounts are for $500 deductible. Over here, what if we want a $200 deductible? What would happen? Remember? Yeah, we're gonna have to add an extra 10%, right? Low deductible, high insurance premium. That's what happened. That's why we have to increase it by 10%. So far so good. We just want to make sure that we know how to read this piece before we move on. This is for renters only. And this amount is annual insurance premium. What does that mean? A year, yeah. This is the amount that you're gonna pay in a year, right? And if you want it monthly, you can divide it by 12, right? So this is annual for the whole year. Okay, oh, sorry, a lot of talking. On the flip side, oh, this one is a little bit more numbers, more things to it. What do we notice here? Now this is for homeowner. So this is when you have your own home, you own your own home, right? You're not renting. So this one here, we have to insure both building and contents. Building and contents. Like building, that's a physical structure of the home, right? And garage, because if you have a garage, that's part of the building structure. And then the stuff inside. Okay. So let's see how do we read this? This is the insurance rate, annual insurance for how much deductible? $500 deductible. So all of these first are for $500 deductible. This is the amount of the house and stuff. So this amount is how much it would cost if they replace everything in your house. How much would it be? Okay. Now over here, can you see here? Metro Winnipeg, Area 2, Area 3, Area 4. So this part here tells us where the fire hydrant is and where the fire hall is, right? In Metro Winnipeg, if you live in the city, most likely your fire hydrant is somewhere close by. So if you think about where you live, is your fire hydrant nearby? Where you, okay, so can you imagine where you live and where's the fire hydrant? Ours is like, what, 5 houses away? Not too far, right? Not too far. This is in Winnipeg, Area 2. The further you are to a fire hydrant and or the fire hall. Okay, what's the other factor? So if you live in Winnipeg or in the city, you have a choice. Is it standard or comprehensive? And then another choice. Here's another factor. Should I pay $500 deductible? Because all of these are for $500 deductible. Or I could choose $200 deductible. Okay? So many choices in here. That's why there's quite big. So here we go. Page 21. Are we okay so far? Yeah.
So these numbers are all premiums?
Those are the annual premiums. Yeah. Those are the annual premiums depending on what our choices are. Correct. Let's put that in. These are annual premiums. Okay. Annual means for the whole year. Premium is how much you pay towards insurance. And then you could, of course, you can pay that monthly. So far, so good. Any other questions? Are good. Yeah. Okay, page 21. Oh, we kind of talked about these ones already. So premiums is insurance premium is the amount that you pay in order to have an insurance. Okay. Your premium is normally annual, which is 1 year. We talked about that. And then you pay it in advance. So some home insurance premium may go up and down from year to year as the value of the house and belongings change. It will normally go up a little year by year to cover the increased cost of construction or to replace your house if the worst case scenario happens. Yeah. Deductibles, we talked about that. So deductible is the amount of money that you have to give to your insurance company first before the company covers the rest of the claim. Deductibles exist so that people do not make claims for small amounts of money. If your house burned down, you would definitely pay $500 to replace your house. Wow, $500 to replace your house, that's it. However, if there's a fire that does $300 worth of damage to your bathroom, you would not pay $500 to get the insurance company to repair the damage. You would arrange to have it repaired yourself because it would be cheaper. Claims-free discount. So claims-free means, claims-free means that you have not made an insurance claim, so nothing happened to your house, right? No fire, no burglary, no broken stuff, right? Also deters people from making claims for small amounts of damages. And if your claim, if you do make a claim, they lose the discount. Okay, so it means like they care about like what's the history of your insurance, right? Okay, now here's the numbers part, and I think this is what we're kind of looking forward to. Shania, I want to add Dwayne there. Shania owns a home. Shania did not move, but in 2018, her house insurance premium was $150, less than what she paid in 2017. Provide as many reasons that you can think of to explain why the premiums were lower in 2018.
She didn't make any claims.
Yeah. Yeah, so the first one would be she was probably claim free for for a number of years. Mhm. Oh, probably the value of her house went down. Okay. So she owns a home. She did not move. Maybe the value of her house. That's an interesting one. Let me think about that one. So yeah, the value of the house can go down, certainly. But I wonder if the replacement value would go down as well. Let's put that there. Let's put that as, and then let's take a look at that. Value of house. Because I know some value of the house go up and down, right? Yeah. Anything else? What other discount can she possibly make? Huh? Let's take a look. So she could probably had some kind of discount. She probably had installed a fire alarm, some kind of an alarm, right? She installed alarms, i.e. fire, burglar, okay, probably she installed a CO, carbon monoxide detector. Yeah, so she could probably so amount of coverage would probably, yeah, it could be less, right? Amount of coverage could have been less. And remember, a certain age, she got older, maybe that age bracket. So increase discount due to age. Anything else?
Maybe maybe they put up a fire station, or maybe another hydrant.
Okay, maybe some kind of a fire station, another hydrant close by. So maybe city built another hydrant close by. Yeah, okay. Here's another thing that what about the deductible? Huh?
I just erased
Oh, you just erased that one. Yeah. So maybe deductible, she's paying more deductible this time. She probably chose a higher deductible. So maybe she did 200 last year, and then now she's doing 500 or 1,000 this year. Okay, so there's many possible reasons why her insurance premium went down this year. Let's take a look at example number 2. Okay. Example number 2. Sophia Rose pays $1,350 each year for her home insurance. She has $500 deductible. If she makes no claim any single year, she receives 15% discount on her next year's premium. In the first year, she made no claims. In the second year, she had to make a claim. Calculate the total amount that she had to pay insurance for the 2 years. So, Sophia Rose, $1,350 each year, each time. So she has $500 deductible. She makes no claim on a single year. If she makes no claim a single year, she gets discount. Let's try that. This is the first year. Okay. First year, how much will she get? In the first year, she made no claims. In the first year, she made no claims. So how much insurance would she pay that year?
You take 15% off that $1,350.
Right. So she's going to be paying $1,350 times 15. How much is the discount? 15%, right? 15% off. So how much is that? Okay. Is everybody okay with this though? 15% means 15 out of 100. You're okay? 15%. So 1,350 times 0.15. 202.50. Yes? 202.50. This is how much she would have paid, but because she was claim free previously, she got 202.50 discount. So that means she's going to be paying $1,350 minus 202.50 1350 minus 202. So on her first year, she's going to be paying this amount. Okay. So she's going to be paying $1,147.50. On the second year, she had to make a claim. Now, because she had to make a claim, she loses that discount. So no discount. So this is going to be $1,350. No discount this time. Okay. So how much did she pay for those 2 years? So this year, for 2 years, she would pay $1,147.50 plus $1,350 . Okay. Okay. Now, because we have to apply the taxes, okay, how much is the tax that we have to do? If you go back, it says we have to pay 7% tax. It's applied to all insurance. So we're going to apply 7%. So how do we get the 7% tax? Yeah, so we could do that times 0.07, right? Can I show you a slightly faster way? Is it okay? So, because if we do the 7% tax, then we have to add this amount again, right? So, if we do 7% tax, it would be just that amount. Then we have to add this piece. So, instead of 7%, just 0.07, what we're going to do is we're going to multiply by 1.07. Have you seen something like that before? No? Okay. Not yet? Yeah. So this is the 7% tax, 0.07, but then I added the 1 there, so that means that whatever this amount is, it's already automatically added there. Okay, I'll show you the long way and I'll show you the short way. So this is a shortcut.
How did you get 1147?
Oh, this one?
Yeah.
I took the amount and then there's a discount of 15%. So we got the 15% discount that came up to 202.50. So take the 202.50, so that's this one right there. So this is a discount, so we're going to apply the discount. Yeah, so we got to take it away, subtract it.
Oh.
Okay? Is that okay? So now, let's going back to this one. We're going to figure out this and then the 7th tax. 2497.50 times 1.07. It's going to be 26.72, and I gotta do 33 cents here. 33 cents. This is the shortcut, multiplying it by 1 and then the 7% tax. Now, the long way, how does the long way go? Here's the long way. 2,497.50. Okay, so that's the amount, we know that. Now we're gonna apply the tax there. So times it by 7%, which is 0.07. Is everybody okay with this? Yeah, 0.07. So it's 174.83. Again, rounding it off to 2 decimal places. Now this amount is actually just the PST. So when we do apply it with the whole amount, so it's going to be 24.97, and then the PST 174.83. It should come up to the same amount that we got earlier. So it's 26.72 and 33 cents. Is that the same amount? Yep. So this is the shortcut. So if you want to do just a shortcut, 1.07. That's including the amount that you're paying and the taxes. This one here, you got the 2 steps here. Figure out the taxes first and then add it together. There's no right or wrong. If you want to do this, go ahead. If you want to do this part, go ahead. We're going to get the same answer anyway. Okay? Good. I think what I'm going to do is I'm going to stop right here. I'm going to stop right there for today. However, I will give you, because it's too long of a set of notes, but in terms of homework, something for you to do, okay, is this. For practice, on page 25, do questions 1, 2, and 3. Questions 1, 2, and 3 only. Okay? So these ones is just basically an explanation, right? So do those ones. And then tomorrow we'll pick up the rest. Okay, so leave it to that one.